Good morning, everyone. I figured today I would make a recording of the top weights and kind of walk through them in a little bit more detail. I know people like abbreviated videos during the week, but I figured this would be a good time to really dig into a little bit more of the profiles and the retracement levels to really see what we're working with. For those of you who have followed me for a while, I look at the top weights frequently just due to it being a market of stocks. Looking at the Nasdaq profile and the Nasdaq charts do a decent job, but here we can drill down into what controls most of the weighting of that market. So, without further ado, we'll start on Apple. Let's just go ahead and we'll start on weekly charts and work our way in on all of these. So on Apple's weekly chart, you can see all the lines have already been established. And the thing that I'd like to draw your attention to the most is the pairing of 160, 1.8 retracements here, the dashed grays, 219 and 221. This has been acting support since we broke above it. Generally, what we look for at retracement extensions is a large amount of volatility and then a decision of either corrective action lower or the next leg higher. That's what we see here in Apple, right? We break in July of 24. We have quite a lot of volatility around this price point. We run from 237 down into 200 and back up before we start and do this major consolidative pattern. We see that consolidative pattern here as well on the daily chart. We have a nice volume profile that's been built out, and this is all the volume that's traded in this range. So as price breaks up and outside of this volume, this node is going to start to act as demand. When price comes back into it, this demand is going to function as support and try to hold this price as people who are long here reestablish and add to their positions. And the same idea when you approach a volume node from below, right? If we were down here, in the 200s and we reapproached and hit and we failed, then we're looking at volume as supply. And then all of the people that were long up here, as price comes back into it, they realize that they are not as underwater on their positions, and then they can sell the position, and that is what creates the washout from the volume nodes. And so we see here on Apple just a very basic outline of the compression that we're within. We tested down into the support box. We caught a really nice break higher. We have earnings. We test just above the 61.8 of the cycle from the all-time highs into that low at 244.5. And then we once again see that failure back down. We would expect that given the volume node down here that we would start to see a little bit more support on Apple, so long as obviously the market allowed for it. And so now we can kind of suggest that this is also a supportive area, right? And why? Well, so we establish a retracement from the lows here up into the high here, and that's this green one. Here we go, at 230 even. And so this is going to be the level that we consider to be the trailing stop, or at least that's how I consider the trailing stop. And this is going to allow us to know that the price action is still moving in the bias that we wish, and we're also not getting stuck back down into this volume. Volume is very constrictive when you get into it. You can see that relative here, how all these candles are very, very tight in all of these ranges. And that's just because you have a lot of push and pull. You have a lot of shorts trying to break this down. You have a lot of longs trying to reestablish it higher. And that's why oftentimes within volume nodes, you kind of see that gobbledygook there. So from this bias, or from this standpoint in this chart, we would say that support, we would hope, has likely moved up from 223 into 230. And for that reason, we'll leave that green box there because it allows us to know that when we come back into this 230, so long as the market isn't in critical shape, that this is going to be a very supportive area for the stock. When we come back down into this area, then it offers us, our higher price targets, 237.44, 244.54, the high here, and then back up into all-time highs. And while Apple or any stock maintains a consolidative basis above volume, it's not a bearish pattern. Consolidation is your third type, right? Where everyone seems to want directional bias and everyone seems to lose money trading options because of decay. So this is Apple. Now let's bounce it back up to a weekly chart because I don't want to make everything seem rainbows. Most of this video probably isn't going to be rainbows, honestly. Sorry about that. But so let's look at the what ifs. What if 219 doesn't hold, right? So 219 doesn't hold. We have to assume that we need to break down. No, there's no volume in this range, right? When we see that on the volume profile, you see the grays and the blacks, and there's nothing in here to suggest that there would be volume as support. And so the volume profile would say that if we lose 219, 194 is almost a requirement, right? There's something has to catch us. That is the backtest of the previous all-time high, which is nice. And if you'd like, we can. I also like to go about it this way. So let's say that this is all a consolidative range for Apple, right? We found a base, we found a high, and then we stuck in it. And that's 8.35 billion shares traded on Apple from consolidation from the June 24 to current. Now we know half of most volumes are buying and half are selling. So we know that about 4 billion shares are going to be wrong if we break down 219. So if we break down 219, let's see where 4.5 billion shares are, right? You can see that down in the smaller node, and this is about 4 billion shares here. So we can safely say that if we break down 219, we should at least make it to base here at 194, which further plays into our hypothesis, right? There's no volume in here, so we need to find the amount of volume that can take care of all the longs that are terminating their positions. And we're going to do that when we come back down here into the space, right? Because what this is measuring is just the 1, 2, 3, 4, 5, 6 candles right here. And it's still 3.96 billion shares, which is just about the 4 billion we're looking for. But if you consider that we also need to extend this line over this way, because all of this is support, now you're at 4.88 billion shares, right? It's hard to see under there. And so we know that this area should start to be supportive, and maybe we don't buy the initial 200 or 194. We let some price come down and test into this volume. But we know overall that if 219 breaks, this is going to be our next target, right? So let's just go ahead and drop it here. And so what does that leave us? So if we lose 219, we have an option on Apple to move anywhere between 8 and 11, let's call 11.5% lower. That's the risk, right? And what is the reward? So if this is just consolidation and it's just another day, we would look to either establish a long off of our major support, and we would try it up into the 61.8 of the cycle. That's 21 points, it's 10%. And that's what we got off of this base too, right? 11.6%. And so from there, we now know that this is a localized high, and we don't have that range that we have to clean up anymore. So really what you're looking at now is something like this. So any establishment over 244.5 now can offer you back in the all-time highs. But again, that is volume. It's from the 160 or 261.8 and the 168 retracements. And so not nearly as much upside range given here into Apple as we have potential for that downside action. And going over into Microsoft, same idea. We'll start on the weekly. All Microsoft's lines are already established as well. You see, this is just a really giant bull flag, right? We have a massive run up from October 22, 120%, and in that we've established in the top 23.6% retracement of that at 408.19. That's really quite impressive, especially if you consider that the stock has been consolidating since basically February of 2024. And so if we want to go ahead and do the same thing we did with Apple, we can figure out the volume, 5.2 million shares, and we'll take it off a breakdown. So we need 2.6. There you go. So this node is going to function as support, and we know that node should function as support if we break down right. It's the next largest node. This node sticks out here. This node's out here. Obviously, there's more volume here in this range, and this is proving to us that that is correct, right? There's 5.2 million shares. We need half of that to catch. That's 2.6. If we draw down through range, we find volume of 3 billion here once we manage to get into the 50 fib here around 140, 141. And so we would expect that this would be the supportive base of price if we were to break down. Yes, there are retracements above price at 360 and 371. But ultimately, we're looking for this patch of volume. And that's not to say 370 isn't going to catch a bounce because you see that it was supportive here. But If this is a news flow related breakdown, then you're going to have to find like volume, and like volume is down here at the 330, 340 range. And if you consider the breakdown from 408 into there, you're talking about 16.6%. Again, that's assuming a breakdown. Consolidative or stocks can remain consolidated for a very larger period of time. We've seen that with Amazon back in 2020, 2021. They consolidated for years and set a great pace. So I'm not advocating that this is going to break down, but given our general propensity for action and direction is up, I've kind of feel obligated to explain how much risk is laying underneath some of these potential breakdowns is all. And that's not to say that this has to break down again. 408 has been support, 439, downtrending. If we manage to reestablish over 439, all of this volume under here is, like we've talked about before, is going to function as demand. And it's going to chase price up and over 439 and any decent news flow. Now you're looking at softy back up into the 520s as opposed to that breakdown. And so you say, okay, so 439 up into 520 is going to offer softy 18% on the break above 439. Yes, things can happen. Yes, news flow. But generally, just by the consolidative portion of the chart, we would assume that the break higher, given all of the volume here, would break at least up into that 520 range at 18%. And then we have the longer term 261 established up here at 580. And so then you're talking about something like almost 30%. Again, either break is possible, and that's why this video is being made. So now over into Tesla. Tesla weekly is kind of a scary chart, just given the run up we had off of the 260 break. There's not a lot of longer term supportive volume up here. We are trying to base this previous high, which is nice. We're up at the 23.6 of range, just at 397. Go into a daily chart, get a little bit more definition to this. And this is what we're left with on Tesla. So we set the down range and set the 61.8 at 442. We bounce and we test downtrend and right just below at 442. And now we're starting to compress down here into the support, pretty much a must hold support, 397 to 399, right? And let's just dial it down one more time because of the chart. There we go. And so let's go ahead and just do the same thing we've been doing to everything else. We'll assume that the consolidative range is here. That's 2.1 billion shares. And if we want 71 billion shares, there you go. Found your 1 billion. So here, the breakdown from support offers something between 12 and 22%. The issue here is that there's just no volume in this range comparative. But we do see that the 1 billion versus the 2 billion up here topping. So for supports 340 and 302 to the upside. Again, just like everything else we've talked about, if we re-establish over the cycle 61.8, the cycle from the high to the local low, which is 440, 442, then it opens 10% to the highs, and then 26% up into the extension, the 161.8, as well as the longer term fib at 261.8 as well. Again, a lot of consolidation at top of range. This is a bullish pattern. The risk is a breakdown. And again, I just bring the risk of breakdown up because some things are going on right now in the global markets that could cause issuance. On to the Amazon. Let's go back out onto a weekly. And this was the consolidation, by the way, that I was talking about a second ago. When from Amazon established from 06 to July 20 all the way over into March of 22, just one giant consolidative phase. It breaks down, and then as soon as it recaptures, it forces this rally hard. And the reason why this occurs, right, is because so you have you have all of these people. You have half of these people long and half of these people short. Stock gets bad news, but the longs aren't all closed out, right? Shorts chase down. And when we re-rally, we retake this whole volume node, and that puts everyone down here that was pressing shorts into a position of being wrong. So now all of these people are forced to cover and liquidate up, and that's what creates this huge rallying action off of volume, right? And this is all the trapped shorts having to vacate their positions. And we can see again, we see that if we do something like 35 billion shares traded. So how do you express 35 billion shares? Half of 35 billion, 17 and a half. So we haven't even fully expressed all of the shorts that needed to cover out of the Amazon position yet, really. I mean, it's getting close. Like I wouldn't press too hard, but so yeah, again, this is just the basic supply and demand for the most part. But anyway, the reason we're on Amazon is for this chart. So let's go ahead and check it out. And again, giant volume node down here, right? If anything ever breaks down, this 177 is basically a fortress. Not advocating for it again, but just saying that if that does happen, that's the potential. We do have a longer term 160, 18 up here at let's call it 255 with a shorter term at 260. Really gets right up into that wedge sometime in April if we do maintain the secondary uptrend channel here on the weekly. We dial it down into the daily. And we just see some similar consolidative action, right? This is going to be acting. This is the volume profile here on the right side is visual volume profile. So any candle patterns that are on the chart are going to affect it. And you can kind of see that how it changes out. So I was just trying to find a time frame where we could see the volume. There we go. That's a little bit better. Okay, so we can see that we established a retracement on Amazon from the local low up into the high. And that puts the 61.8 at 225.97. We can also establish one off the gap down, and that puts the 61.8 at 232, 231.84. And that's currently the supportive point. We would expect that 232 would hold and 226 would be S2. But we are also coming up into a retracement extension that we discussed already. So while Amazon doesn't really show any signs of needing to be protected on the long side, it is getting to a point where the reward to risk is starting to minimize. What I mean by that is like you have 5 points up, but you have 6 points down, right? Generally, I'm looking for 3-to-1 reward to risk, right? So I'm going to need 15 points or 18 points here. And so for me, I'm not really as interested in playing Amazon, right? Because I have to break out of a Fibonacci extension, I have to break a trend line, and we already know that we're starting to run out of buying pressures from the trap shorts. So while Amazon doesn't look bad at all, it's just not really one I don't think I would want to play. And if we do start seeing tariff issuances, I would assume that Amazon probably is a critical stock to pay attention to. Pulling Google onto a weekly. We see Google weekly. We're testing into the trending resistance and we're starting to break above it. Honestly, this is one of my most favorite stocks. I just feel like it gets kind of pushed out. You check the options profile on Google and there's almost never anything traded. So I do really like Google if we are to continue our upside path. You see that uptrending resistance here. We have a shorter term. We have the shortest term, 61.80 here at 196.36. It's just above the uptrend and this node of volume. The must hold here on Google 188 to 191, and holding there and then holding that 196.36 opens into the other extensions. Really like it up here for 220. We do have earnings coming up next week though, and so that's a bit of a risk. But for now, compression at the highs is not a problem unless we get that breakdown from that 189 to 192 area. And again, that breakdown is an issue too, right? Just like everything else was an issue. We don't have really great structure in here. We have 945 million shares traded. So you need half, 450, 475. So you're really looking at coming down into this range, the 176 to 169 range, to test support. You also have a gap fill at the primary and secondary here at 176, 177 range. And so we would assume that if Google were to break down, then that would be our target. And we're considering the breakdown from the trend in the bottom. So we're saying that Google has an option to break down 7% from the base of the trend, or around another 14% from here. Again, earnings on next week, the 5th or the 6th. 6th, I believe Amazon is the 5th, right? 4th and 5th. So Google reports on the 4th, Amazon on the 5th. And so we'll see how this consolidated break plays. But again, bullish consolidation at the top of range isn't bearish unless you lose the bullish consolidation to start the breakdown process of supply and demand. So this is a stock that, again, could just sit in range between 189 and 205 for a very long time if it wanted to, and just build out a larger volume node. Finally, let's get over into NVIDIA. Well, first here, this is the weekly NVIDIA, just to get that out of the way. There's a lot of structural problems underneath NVIDIA below, let's just call it 114.5. Literally, there's a lot of problems. And if we want, we can just go ahead and do what we've done with all of the other ones. 46 billion shares. So, we need 23 billion. So we're talking about this area in here to try to potentially catch support. If we drill down into a daily, we can see that as well, right? So we can support box down on NQ, or on NVIDIA offers around 18% of a breakdown, right? And then volume node is down a little bit lower here, about 24% to the bottom of the volume node. So there is a large chance, or a large area that can be carried through there on NVIDIA as well. Again, massive bullish consolidation at the top of range is not bearish. It is bearish if it breaks down, but while we maintain the support box, this is just massive consolidation. And that's 114 really all the way up into the 150s. We see these blue areas in the profile are high volume nodes, and so these are just showing us where more volume went off within the profile than anywhere else. And so we would say that so long as this area can hold, we should retest that upper high volume node at 136 to 139. Above 139, like most of these other stocks we've discussed, especially with that high volume node and the point of control here, any move back over 139 really does open range up on NVIDIA higher. We can establish, assuming this is the low, we can establish an extension here. And it gives us 175.92 as the next target if we do break up over 139. So I think it's critically important to remember that the market is just a bunch of stocks that people have grouped together, and their charts, while they work especially really well on intraday timeframes, it's important to zoom back out and realize what you are actually trading. And to me, this is what I'm looking at. I see potential risks building. And the problem is, even if it's not a potential risk building, we're still within a lot of consolidative patterning. And if those patterns don't break out, we could just sit sideways within the broad market. It seems that the most likely way to play something like the market right now is individually stock based as opposed to broad market based. Because even within the top weights, you can see a lot of these moves. Some of them are having drastic runs, like Apple from 220 up into 245, but then you have NVIDIA, dropping from 151 into 114. And the market is nice when it's within positive gamma because it allows itself to basically balance itself, right? Apple can go up while NVIDIA goes down because that's going to balance the market. You have the first weight and the third weight, and they're basically moving in unison. And so it's allowing the market that stability. Problem is when we start to play within the negative gamma zones too much, we lose the ability of that intra top weight rotation. And when you lose that, then they start to break themselves down together as opposed to one by one. In positive gamma, you see one stock correct, fix its structure, rebound, the next stock goes down and does the same thing. Within a negative gamma environment, you see all those breakdowns happen in unison, and that's what carries the market so quickly lower, is because you don't have anything to counterpose the others. And so that is the risk that we face moving into this presidential term is, can we continue to create a market that remains within positive gamma so the engine of this market can continue to function as it needs to function? Or are we going to start to see negative gamma environments persist due to headline flow? And if so, that really does create an issuance in the market, as we've seen in these top weights, anywhere from an 8% breakdown to a 28% breakdown possible across all of these. And if you catch Apple, Microsoft, Nvidia, and Tesla all break down at the same time, and they're all going to go 15%, like, what's the market going to do, right? It doesn't matter how many UPS, FedEx's, meme stocks, and GM memes there are. That is not something that can support this market. So, hope you guys enjoyed this video. If there's anything I missed, or if there's anything else you'd like to know, feel free to reach out and ask. And I'll try to stay on point with these videos a little bit more as we move into what could be a little bit more of a volatile market environment. Hope everybody has a great day, and see you tomorrow.